Per usual, everything that channel's for educational purposes only and is not intended as financial advice. Very interesting past couple days we've had here with Blackrock entering the arena. Binance essentially exploding on all continents and shitcoins getting delisted from Robinhood, eToro, and some other sort of third-tier trading venues. All while we have essentially zero hype. We have anti-hype, okay? We have so much bad karma, bad chi, regulatory nonsense going on. No one wants to touch crypto right now. Absolutely no one. Except the stackers, the shrimp, the minnows, the guppies, the whoever who keeps stacking, right? Because there ain't nobody here, okay? Just look at Google Trends. Now, it is better than flat out 0, below 10, whatever. This measures search interest, by the way, if you're unaware. I'm going to start here because this is just a great social indicator for everything. So on the backdrop of this, we have, of course, the Blackrock news. Blackrock applying for a spot Bitcoin ETF, something that the Winklevi tried to do, I think, first in 2013. And then you had Grayscale's GBTC, and then we've had all sorts of applications, right? Years and years and years and years. Now, the thing about BlackRock that no one else had was $10 trillion in AUM, influence, political know-how. They don't necessarily, it's a formality, right? Their application eventually should get approved, no doubt in my mind. Bit interesting that they listed Coinbase as the custodian when Gary at the SEC is going after them for all sorts of interesting practices over there. It's just the juxtaposition between, I mean, it's right here, right? It's obvious that the incumbents are ready to come in, swoop up, and take it all away. They're also going after Tether a little bit here. I'll get to that in a second. BitMEX is long gone. Binance is on its way out, and Tether is the next target. But the big thing was definitely the surveillance piece, the custody piece. That needed to happen. That needed to come together in some fashion in order for this to get approved. And again, they're not going to submit an application if they know it's going to get denied. That's why everyone was so surprised that it came out. Also interesting to mention, CoinShares does this great weekly flows breakdown on all the basically institutional type products. And we've had 8 weeks of straight outflows. So it'll be interesting to see what type of inflows we start getting. Now, this thing isn't even approved yet, right? But within the next 6 months, the assumption is it's going to get improved one way or another. As people have mentioned, there are some potential issues with forking. So let's say we give BlackRock Bitcoin ETF a bunch of Bitcoin, a bunch of paper Bitcoin, whatever. They hold it in custody at Coinbase. There's a fork. There's an issue with governance. One fork is ordinals. One fork has no ordinals. Whatever it is, right? There's a potential for some shenanigans here, or BlackRock is able to heavily influence, the market's decision on that based on what they hold and what they deem having value. Now, this line is kind of in all the applications, so I don't really think it's anything major, but this is BlackRock we're talking about. Now, if you want to follow the ETF saga, there's 2 people. I'll put this in the description of the video. 2 people you got to follow on Twitter, Eric Balchunas and James Seifert. I hope I'm saying that right. They're both ETF or Crypto Bloomberg reporters. And just as Eric is saying here, that BlackRock is teaming up with NASDAQ to enter a surveillance sharing agreement that would mitigate market manipulation. Something else that mitigates market manipulation is Binance moving out of the door. Sayonara, see you later. We also have Bitwise now filing for a spot Bitcoin ETF as well. And both Eric and James were on with Pomp today. I haven't watched that yet, or I haven't watched this either with Luke. Just mentioning that again, I'll put these in the description of the video so you can break that down. Now on to Tether. So there's been some interesting developments with Tether over the past 12 hours, I guess. Tether handed over some financial documents to some reporters at CoinDesk, I believe. And I don't know if this was coordinated, if somebody was trying to decouple the market rate from $1, whatever they were trying to do. There was all sorts of panic in the 3 pool on Curve, where ideally these are split about 33% each. How this works is, you're going to the airport guy at the money changing counter, right? You've got 3 types of dollars. I want this one for that one. We can do this on the Curve 3 pool with swaps without any third party. Great. And all of a sudden, the guy at the counter just keeps getting asked to buy USDT, to buy Tether, right? And all of a sudden, the market looks at this and says, okay, what's wrong with Tether? And then the price drops, and maybe that happens at the same time. And then, of course, everybody else piles on. All the Tether truthers think something's going to explode. It just never does. This is a breakdown of the 3 pool from Dune over the past week or so, let's say. You can see Tether in the brown there just got bigger and bigger and bigger over the past week as a percentage of the pool. So this typically hints at problems with Tether, whether it's price or some expectation that something's going to explode, whatever. But, you know, we had like 30,000 headlines that Tether loses its peg on what amounted to so far nothing. I could be totally wrong, right? But we've had Tether much more volatile than this, farther down $1 than this. Maybe there's this expectation of excellence because it's got 80, 90 billion dollars, whatever it is. But they don't set the market price. The market sets the market price. If you want to sell your Tether for 50 cents on the dollar, somebody will buy it. Okay, if there's no bids down to 50 cents, that's what the price is going to be on that day. Now, there's an understanding that the redemption is always there. But if there are no bids to catch that sale, to catch that ask, then we go below $1. Now you could argue, Josh, this shows a lack of market confidence in redemption or problems with reserves. That's fair. I wouldn't call it losing the peg personally. That always drives me nuts. I don't know why. And you know, you've got Mark Cahotis, famous short seller, who went after Silvergate and Signature saying Tether's next. He said Binance is next. He's also touting T0. I don't really know why. I'm not going to get into that, but also shout out to DL News, sort of a newer crypto news from DeFi Llama. And again, I'll just show this on the screen for a second. My rationale here doesn't really matter. Who cares, right? Call it whatever you want. But I think people, when they say peg, they have a certain expectation. All right, enough about that nonsense. Bitcoin, though, finally catching a bid. You know, we've had no institutional volume, no retail volume relatively. SPX is having a party. NASDAQ's having a party. NASDAQ's up more than ETH is year to date, which is nuts. So here's Bitcoin on the cloud. And we had this head and shoulders edge to edge breakdown, right? Finally, slowly but surely, we hit that edge to edge. And we really ground this out into a falling wedge. Now, what you don't want to see if you're bullish, breaking below the neckline of the head and shoulder, inverted head and shoulders, but breaking below the 200-day moving average ultimately. For me, those are my mental stop losses. If we're below the 200-day moving average, we're in trouble again. You can see we're at the 200-week moving average, which is what this green line is here. But so far, things look okay. And according to the cloud, we're likely to remain volatile until we're back above the cloud. Back above the cloud with the TK cross, it's go time, right? Now, any trades here, you're just betting on falling wedge, basically, which is fine. Still looks great, but trend-wise, not quite there. Measuring the old inverted head and shoulders, you get a target of 31 to 35. You know, if you measure the falling wedge, you get about the same. So the 33K by July target, just ironically, is on the table still. We got some time. Trend-wise, still neutral. One interesting thing, though, you know, if we keep bouncing on support, unlike getting denied at resistance over and over again, we are starting to form a nice little base here. And we have this multi-month base. We have this nascent bullish trend. And just like we did in 2017, we were just grinding. Everybody got super excited. Then there was the Bitfinex hack, and then that slow recovery. And then there was China bans Bitcoin, some ETF denial, right? There was always some event that like mean reverted us over and over and over and reset momentum. So as dead as we've been, you know, arguably this is what you need for a longer term trend, much like the bear side, right? We didn't just go from 60 to 18. We consolidated in between and stair-stepped our way down. So I really don't hate this setup from a longer term perspective at all. And on the weekly, we're not even through the weekly cloud yet. You know, we're like here in June 2019, whatever this is. And there is, for me, a little bit of an expectation now that we are going to attempt some sort of edge-to-edge move on the weekly, which is huge, but still not it's not the big one. It's not the big kahuna. That's not until after having, most likely, into Q3, Q4, 2024. So you got time. Not financial advice. Stack sats. Don't blow up. Don't lose your money trading shit coins, and you'll be fine. Okay. BlackRock's coming, baby. Big Daddy BlackRock is coming. And another odd thing on the quarterly side of things, we've kind of flipped. We've always sort of been kind of neutral on Q1 and better on Q2. And maybe since, institutional eyeballs are on this now and there's tax loss harvesting, and I'm just sort of trying to rationalize it, but we sort of kind of flip. Now we only have 14 days left in Q2. So maybe Q3 will have an unusually positive quarter. I don't know. We'll see how things look when we get out of this wedge, but it is interesting how historically Q2 had been the best until really the past 3 years for Bitcoin. For ETH, it's kind of all over the place, but ETH, I think, typically does better in the back half of the year. So we'll see what goes on there. And something else worth watching for sure now that the ETF conversation's back on the table. Lots of game theory here with GBTC, because does the SEC lose their case? Is that the assumption here against Grayscale? Is the assumption here that Grayscale gets a conversion attempt? Are people trying to front run the BlackRock ETF? Does Grayscale actually not have a snowball's chance in hell at conversion, and people are buying this anyway? Right? I don't know, but it was up, 15% at some point today. Massive wick, definitely out of its falling wedge, held above its 200-day moving average, and it really had a bull div the entire time. One thing about these 5-day-a-week products is that they tend to cut out the noise a little bit because the weekends can get crazy. So sometimes you do get a better view of chart patterns like this, the inverted head and shoulder stuff, breaking the downtrend, what have you. So if you aren't watching GBTC now after this BlackRock news, I would start, because movement here may signify, confidence in an actual ETF from BlackRock. As far as ETH is concerned, it looks okay, but it's not Bitcoin, right? ETH doesn't have a BlackRock ETF application yet. Maybe they will tomorrow, next week. I don't know. But trend-wise, this just looks okay. It's below the cloud. It's sort of recovering from its head and shoulders breakdown. It's at the 200-day moving average. I really don't think the daily is the chart to watch for ETH. I think you probably have to watch something like the 3-day. It's just been quite the grind. Even though there's 3.5 million ETH in inflows since staking went liquid, it just really hasn't done much. So I do like this idea of, okay, we had maybe an Adam and Eve. It didn't want to break up, much like Bitcoin in 2019. Then it sort of morphed into an ascending triangle. Either way, the expectation is, as long as this diag holds, draw this however you want, this should eventually break up. And it makes sense based on the 3-day cloud here. So 2K, definitely the level to watch. Set an alert. Forget about it. Set an alert at 1950. I don't know. And just ignore it because, again, it doesn't have a BlackRock ETF. So there's that. And along those lines, Bitcoin dominance, approaching 50% here very quickly, breaking out multi-year highs again as the SEC is going after altcoins. Altcoins are getting delisted. It is what it is. I don't have to agree with it. You don't have to like it, but price pays. And if alts go against you and Bitcoin is mooning, you do the math. If we look at total 3 minus Tether, USDC, and wrapped Bitcoin based on market cap, it doesn't look great, right? I couldn't take wrapped ETH out of here, but you get the idea. If we go down this list, let's be honest. What is left? There's a lot of layer ones here that are doing a lot of things. Sure. Could they all be called securities? Absolutely. Abso-freaking-lutely they could. No doubt in my mind. Maybe not Dogecoin, maybe not some forks, but I'm sure the SEC would find a way. So I would be very careful playing in altcoin land, at least until dominance, also as crushed as alts are, they need to get even more crushed. And if you're looking for some TA targets, right, 54 to 57% on dominance, that's what I'd watch for. And then maybe think about starting to rotate into some of these, what if BlackRock comes around and says, let's get a Solana ETF going, right? It would be interesting what type of language they would use for proof of stake tokens, because there would be some sort of yield dividend component to that, potentially. I don't see them listing a Litecoin or Dogecoin ETF, but people have joked about that for years. I just don't think it's going to happen. Then let me just wrap up on some TradFi stuff. S&P's just been, on a tear, obviously. Complete runaway freight train to the top side here. Absolute parabolic move. I will take credit as being one of the very few people calling this from a TA perspective as an inverted head and shoulders, looking at this objectively and saying, okay, there's a lot of noise out there. Yeah, I get it. There's going to be a recession, sure. Whatever. Another great example of why having some understanding of TA is very, very helpful. You don't have to agree with all of it, but having some understanding. The next thing to watch for here would be a bear div on any higher high into that price target area. Much like the all-time high where you have a massive bear div, right? You're looking for a higher high in the S&P on lower momentum. And it should be pretty easy to put in lower momentum because it's already at 90 on the RSI. And adjacent to that would be, I don't want to get caught ultra long, turbo long when, Bitcoin hasn't been correlated to legacy on the way up, but it may be correlated on the way down. So definitely keep that in mind. And lastly, DXY, mega reversal on Fed pausing, skipping, holding, whatever you want to call it, this week with the ECB raising. You've got China cutting, which is nuts, but this also looks very bullish to me. Any significant hold of these lows should result in a higher high. So from a trend perspective, anything above 104 would probably be good enough. And we would get there if the Fed decides to raise in July. Now, I don't think they're going to raise in July. Should they have raised this meeting? Probably. Should they keep raising? Probably. But I don't think they're actually going to do that. So that's all for this one. Let me know what you think about the BlackRock ETF in the comments. Like, dislike, share, subscribe, and happy trading.